All right, what's going on, motherfuckers? All right. Hold the fuck up. All right, there we go. What's going on, guys? In today's video, we're going to be talking about SMT divergence and how to use it, how to spot it, all that good shit. So let's get into it. All right. So the first example we're going to be talking about is a bullish SMT divergence. Now, the way you find SMT divergence and the way you're supposed to use SMT divergence is you find correlated pairs. For example, ES and NASDAQ, right? ES or NQ, SPX 500, NAS 100, those two are correlated indices. They are correlated pairs. So you could use SMT and you could spot SMT divergences with these two pairs. Other pairs that I personally like trading is like EU, which is Euro USD, and GU, GBP USD. Those two are correlated pairs as well. And you could also, if you only trade Euro USD or GBP USD, you can use the DXY, which is the dollar index, to spot SMT divergences on EU and GU. So if you only trade EU, use DXY to spot SMT divergences, and the same thing with GU. Now, what is a bullish SMT divergence? This video is going to be short. It's not going to be long. It's a simple video. Bullish SMT divergence is basically when one of the pairs makes a lower low, but the other pair makes a higher low. Like this example on the top. This is a bullish SMT divergence, right? So let's say, for example, this is ES, right? This is ES right here, and it made a lower low. You see that it made a lower low, and you have your screen split down the middle, like my butt cheeks. And then you see NASDAQ over here, it makes a higher low. So you would want along the one that makes the higher low because obviously it's stronger, it's not breaching the low, and ES is swiping liquidity down here, it's breaching its low. So you want to look for entries on NASDAQ in this case. Real quick, you don't want to just long it because it's a higher low, right? You want to go into the smaller time frames. So let's say this is on a 5-minute chart, which is the example I'm going to show you today, right? It's on a 5-minute chart, but let's say it's a 5-minute chart. Say it's a 1-minute chart, right? You want to look for breaks of structure, okay? Especially like on ES or something. When it goes and makes a lower low, like this, in this example, zoom into like the 1 minute and see if price is displacing up, or if on the left there's like a order block or fair value gap. Same thing on NASDAQ. See if it's pushing up, if it's displacing up. Because once that starts happening, once this higher low is confirming with displacement up and it's breaking structure on the lower time frames, then you would want to enter and place your stop below the low, which would look something like this, right? You'd want to enter like that and then place your low here, or place your stop here, I mean, or even at the low that was breached on ES like this, you would want to place your stop on NASDAQ below that low that was breached on ES. So you would take the same low, right? For example, if I had, you'll see right here when I show you an example, but this low was not breached on NAS. So you would go long somewhere over here once you see a break of structure or whatever. And then you would place your stop below that low, or even this low, right? Because if it is a true SMT divergence, price should not come back down to those lows because ES already swiped those lows. NASDAQ is stronger, so it should continue up from here. Now that is how you use a bullish divergence. Same concept with the bearish divergence, which is this one right here. So let's say this is ES and this is NASDAQ. So which one would you want to short, right? Obviously the weaker one, okay? So you have ES making a higher high, but you have NASDAQ making lower highs, okay? This is the one you would want to short, right? You go in here, you see if there's displacement lower. Is ES breaking structure right here? If it is, then go ahead and just short NASDAQ. If it is truly bearish, if your bias was bearish, your higher time frame bias is bearish, then you can go ahead and short and place your stop above the most recent swing high or the high that ES took and NASDAQ didn't. And then you would target, obviously your TPs, TP1, TP2, etc., etc. So that is how you use SMT divergence. That is a quick rundown. Now let me go show you guys some examples. All right, so here today we have ES on the left and NASDAQ on the right. Now, if you guys notice here, we have on the 5-minute an SMT divergence, right? We have NASDAQ. Let me make sure I got this right. Let me put it up to this low right here. So the way you guys can split screens and make sure, like whenever you hover over it, you guys can see the same time. You see how right there it's like March 8:35. Well, you can't see it because I'm on my fucking ugly ass faces right here. You can't see the time, but it's the same time, okay? 8:35. This is the 8:35 low, 8:35 low, okay? Now you notice how ES came down, swiped this liquidity, but NASDAQ didn't. So obviously NASDAQ is a stronger one, and this is the one you'd want to long. This is the one you'd want to focus on. Now, let's see. Let's go down to the 1 minute on NASDAQ. Let's see if we could have found an entry. So now I'm going to have to go back. I'm going to have to go back. I'm going to have to go back. Let's see. Okay. So this is still the 5 minute on ES, and this is the 1 minute on NASDAQ, right? This is SMT with ES, which is SPX 500. Okay. Now you see how we push up, we break structure right here. You could have entered right here, place your stop below that low. Same thing on ES. You could have found the same entry. This is the one I took personally, but because I wasn't watching NAS today. But this is the one you'd want to focus on, right? Is a stronger indice. You want to see if there's SMT divergences between these correlated pairs. And now, again, you could use this on EU, GU, ES, NAS 100. I haven't really back tested it with any other pairs. Those are the only pairs I really trade. So I'm pretty sure you could use this with like Euro JPY and GBP JPY, but not sure. You guys can go and back test that. Anyways, this is how you use it. You go ahead, you break structure right here, you enter here, place your stop below this low or that low. If it is a true bullish SMT divergence, it should not come back down and stop you out, okay? So it would look something like this. You take out my long position. You would long right here, market long right there. Put your stop below that low or this low if you want to be safe. You know me, I don't like risking a lot, so I would be TP1, then TP2, TP3, etc., etc. So that is pretty much how you find SMT divergence. That is how you use it. It's the same thing with the bearish divergence. You guys can go and back test this. Now, again, let me remind you guys, I only use this for ES and NAS and EU and GU. That's literally it. Yeah, this can work on crypto. If anybody's wondering if it works on crypto, it can work on BTC and ETH. I've seen it done before. So with that being said, I hope you guys learned something today. I hope you guys utilize this. And again, let me remind you, do not just go long based off SMT divergence. This is just another confluence for your trading ideas, okay? Whether you're bearish or bullish, make sure your higher time frame aligns with everything, and you should be golden. So with that being said, guys, I hope you guys learned something today, and I will be dropping more YouTube videos in the coming days. So keep an eye out for that, and I will see you guys later. Peace.